Tom Cloud with my bi-monthly precious metals market update. We've entered a center very slow time of the year, which is summer, June, July, August. It's a great time to reevaluate, to look at situations we know are developing, try to see how it'll affect the gold and silver market. And we just know today on June the 20th, 2023, as I film this, gold's had a big drop. It's now come from 2,040 back down to 1,930 something, $100 drop. So the first question that we get is, do we need to panic and get out? And the answer is no. I mean, it's actually a time to cost average in if you don't have all the percentage you want allocated to your gold and silver and precious metals. So and the second part of that is there anybody listening to this that thinks gold is seen its all-time high for the rest of our lives? And certainly I don't. In fact, I think it'll be back above the 2,040 this year, and it'll happen in the fall, as we usually have our best 2 months. Over the 47 years of doing this, if you take a combination of 2 months, if you take September and October coming up, and you look at the whole year when it's over, those, more than any other, will be the two best months for appreciation in the precious metals market. So certainly it's a great time to look at, follow the price. When you get a price you want, get it, because once again, you're getting about a 6 or 7% free start, in my opinion, because I think gold will go to an all-time high this year or the first quarter of next year at the worst. So that's really important. Silver, just questions pouring in about silver, and it is hard to, even for people who've spent 40-something plus years dealing in it, giving information, watching indicators, watching supply, watching demand, watching premiums, what are wholesalers doing, what are manufacturers doing, and you watch all this and you try to come up with what's going on. And we know right now, silver does not do well when you have recessions and economic problems. So a lot being said out there that we're still headed, even though they didn't raise interest rates, the Fed last week, we're still headed toward a drop and a possible loosening of interest rates. So if that happens, certainly gold is always going to be the winner. It's money. It's traded in all 28 world markets, and it is the best thing you can hold during the recession. It's proved it every time we have a recession. But silver, because it's an industrial metal first and investment metal second, you've got to watch the economy more, even though demand is growing quickly through solar panels, electric cars, and all this. Demand is going to reach bigger proportions. So right now, I can't tell you, we've watched a drop the last 2 days of silver I didn't think we'd see. So I look at it as an opportunity, and I personally have increased my allotment to silver, even though it possibly could go down a little bit more. But with the spot price and the $23.15, 20 cents, when it was 25 3 weeks ago, and still up for the year, it looks fantastic. And you can talk to Dan in our office. Dan's been with me over 25 years and one of the best analysts in the gold industry. And he'll be happy to talk to you and answer, or make an appointment, and I'll be happy to talk to you about that in detail. But it is a great time to look at this, and especially with what's going on in the banking industry. That's the giant nobody's talking about. That's the one that we saw the banks go under, close them up, and we saw our government do what they said they would never do when Obama was president and Biden was vice president, going back, that they bailed out, raised the insurance to $250,000, and got people back in where they trusted paper money. Well, let me tell you, there's over 200 banks now that have failed the stress test. The 3 or 4 that have already gone under tip of the iceberg. And a lot of it's going to unravel this year. So that is more than anything, the best reason to buy silver and gold is to get money out of your bank account, especially if you have over 250,000. You need to get it out and ready for what lies ahead. So I really like it from that standpoint, even though economically it can be pushed to go down some. So it's one of those good news eventually, but it may get a little worse before it gets better, or it may just go straight up. All depends on what happens. But Ray Dalio that I've talked about at Bridgewater, the number one money manager in the world, manages the most and has the best track record, still says for the fourth quarter, he's looking for gold to be your main bedrock investment. And he also likes other precious metals, including platinum, but his gold is where he is and where he's got a large stake of the money he is managing. So I think that'd be a great thing to do. So what we've done is we've come back in after, as y'all know, I took 2 weeks, went to Italy, saw the disrespect for the dollar. Everybody we met with said, it's, what are y'all guys over there crazy? They talked about our social issues. These are people highly respected in the finance and the metals business in this world. So it was great to talk some, but the total lack of confidence in the dollar is what's going to cause it all to unravel. And we've seen, even though it's made a rebound here when silver and gold have come down a little bit, it's still about 8% below where it was when the year started. And once it goes, as I said, below 98 on the world index, watch out, because every 1% the dollar goes down, gold will go up about 2.5 or 3%. So if it goes back down to 72, that's 20 basis points. That's 60% that we would anticipate gold going up. So right now, the light out there, we're back. Just know if you go to Europe, our dollars don't go like they used to, and nobody wants to take your dollars. They don't want to exchange for them. They don't want to take them on sale where you could always buy things and get it priced in dollars. Does not exist right now. So anyway, anything we've talked about, you can call and talk to Dan or Catherine or myself at 800-247-2812. That's 800-247-2812. And with those baby boomers retiring, millions of you, when you come out of your job, take your 401k and do a self-directed IRA for gold and silver and a self-directed IRA for your stocks and bonds. And that's what you need to do, and we're seeing, and Dan has been our expert for the last 10 years on that. He'll have you set it up, get you all the information you need. We at Cloud Resources Group can be your dealer, but we can't be your custodian. But Dan can help you get that. So I think last week we had one of the biggest weeks for a number of IRAs formed, and this is going to continue because when you're in a 401k, you can't own gold. The insurance companies and brokerage firms that set it up wouldn't put it in there because they couldn't get a management fee for it. So what we're saying to you is when you take it out, don't leave it in, whatever you do. If you're retiring, take your 401k out and split it into, you may put 70% of the money in stocks and bonds and 30% in gold and silver, or 20, or whatever it is. But the key is having two separate IRAs, self-directed IRAs, to where you can take advantage of both the stock market, bond markets, and the precious metals market. So hopefully we've got a little groundwork coming. excited about it's coming, not because of what it bears, but because it gives us time to think and know that there's a lot coming and a lot to be heard. And the debt and all this stuff you heard about, none of it's over. It's actually worse than any time before. So anyway, with my bi-monthly self-directed assets on gold and silver, I'm closing that out.